What was the Bubble Act of 1720? South Sea history. Imagine a time when the stock market was like a giant balloon ready to pop, causing chaos across the economy. That moment in history is linked to the South Sea Bubble and a law called the Bubble Act of 1720. This act was passed by the British Parliament in June 1720 during a wild period of stock market fever. Its main goal was to stop the creation of new companies that could cause more chaos. It said that no new joint stock companies could be formed or sell shares to the public unless they had a royal charter. This was meant to keep the market from being flooded with risky and fake companies. The South Sea Company was at the center of this frenzy. It had a government-granted monopoly on trade with South America, which was then controlled by Spain. The company also managed Britain's national debt, which made it seem very powerful. Investors believed the company would make huge profits from trade, even though Spain had strict rules and taxes that made trade difficult. Still, the company's stock prices soared because people thought they could get rich quick. Many investors bought shares, hoping to sell them later at a higher price. The company also lent money to investors to buy more shares, creating a bubble that was bound to burst. The Bubble Act was meant to stop other companies from popping up and competing for investor money. It was like a law that said only companies with special permission from the king could sell shares. But instead of calming things down, the act made it harder for some companies to operate and caused liquidity problems. When the bubble burst later in 1720, the stock prices of the South Sea Company collapsed. Many investors lost all their money, and the economy faced a big shock. The act did not prevent the crash, but it showed how governments tried to control wild speculation. In the end, the Bubble Act of 1720 was a response to one of the earliest big stock market crashes in history. It aimed to limit risky companies and protect the government's interests. However, it couldn't stop the South Sea bubble from bursting, and the fallout affected many people. This event teaches us how difficult it can be to regulate markets and avoid financial crises. It's a chapter in history that reminds us how greed and speculation can lead to big economic disruptions.